The European Union says that its latest projections show it's only expecting to grow 0.2% this year, despite an initial surge in growth following the lifting of COVID restrictions. The bloc has been hit hard by recession fears and the war in Ukraine, as well as extreme climate swings. So for more on this, I want to bring in Ann Berry. She's the founder, CEO, and managing partner of Threadneedle Strategies and has over a decade of experience in markets and investing. Thanks for joining us. I know the factors that are influencing the economy here in this country, but what are the factors causing slower growth in the EU?
Well, Anne-Marie, the big difference between the EU and the US when it comes to the consumer in particular is the energy crisis. You know, the US, we've talked a lot about oil and gas prices going up, but what's been going on in Europe has been at a completely different level. Winter has been devastating for many households because the cost of heating their homes has gone up in the 50s and 60%, and that's really crushed the ability for the consumer to go out and spend. So that's been a big difference in terms of the lived experience over there.
So we know that the Federal Reserve here has been slowly increasing interest rates in order to sort of keep track of inflation and bring it down. Often when that happens here in the U.S., we see it happen in other countries as well. Has that happened in the EU with other banks over there? And is it working when it comes to slowing inflation?
Well, all of the global central banks, Anne-Marie, have been pursuing the same policy, which was aggressively hiking rates to try and get inflation down. I think what we've seen coming out of the European Union a little bit sooner and out of the UK as well is considering slowing down the rate of increases, to take a pause and to try to see what has the impact been of these aggressive rate hikes on inflation pressures and on driving demand. So that dialogue started a little bit earlier here. I think if we see Jay Powell start to slow down the rate of hikes here in the US, we'll start to see it accelerate elsewhere as well.
So when we hear on the side of the pond that growth is slowing in the EU, I'm trying to sort of understand, in a way, and this is going to sound callous, why we should care. What's the impact? What's the connection for the economy here?
Well, the US-EU relationship, Anne-Marie, is the biggest economic interconnectivity in the world. So just to put some numbers around it, about 16% of everything that the US exports goes to the European Union. So that's a really big core market for us here in the United States. About 60% of all of the money that the US corporations invest in other markets goes to the EU. About 60% of all of the money that the EU invests overseas comes here to the US. So these are hugely connected economic trading blocks. If we talk about it in terms of the markets, if we look at the S&P or the Dow, about 40% of revenues of the biggest companies here in the US come from overseas markets. So we should care, because what happens in terms of GDP growth in the European Union fundamentally impacts how American companies are able to send and sell their products overseas.
Great answer. Ann Berry, thank you very much.
Thanks for having me, Anne-Marie.